Hi, welcome to globalinvestorradio.com. I've titled this broadcast Indian Stocks Part 1. I have a portfolio of Indian stocks I've been investing in over the last couple of years, and I just wanted to go through some of the opportunities potentially still in the Indian market and some of the more overvalued, overcooked stocks that I'm also looking for selling positions as well. There's quite a few headwinds potentially on the horizon for India. I've noticed that a lot of magazines and financial publications are promoting India at the moment, and it seems to have gone from a pariah to something to invest your funds into in terms of the next big economy there set to expand, like China was being promoted back in 2003. And of course all that is true, everything has a semblance of truth. And you can see here the Nifty index here in India, it's gone up from 500 all the way to 8,700, almost I think 1,500, 1,600% rise over the last 21 odd years. And you can see it's been quite a huge rise with a nice consolidation period during the Great Recession that kicked off in America. And you can see the triangle it formed and the upper congestion level where my mouse is, and then the breakout with the Modi election and the parliament that has a lot of support for Modi so he can get through his proposals without complication. What I'm seeing here is the market is really shot up out of this consolidation area here, which I don't particularly like to see in terms of spike moves and the steepness of which it's risen. If you can see here back in 2003, this is the type of trend line that I like to see formed. But probably, estimation wise, there's probably a good 6 months to a year, maybe longer, left in the overall index for it to move up, for them to keep pumping mutual funds, ETFs and those types of offerings to the public whilst the market is reaching highs. And you can clearly see here the type of move that it had back in 2003. It spent about 3 to 4 years in its upward movement, but it came from a nice base, whereas this one in terms of a distribution and consolidation and congestion area was nice as well, and perhaps you could say it was just as effective as this particular accumulation area here. But I would say that this move, upward move, probably has got about another year left in it max. So it's time to look at some of the Indian stocks that are being overcooked. And you can see here a perfect breakout area on the 5-year weekly, a flat top almost triangle, and the congestion area here with the smaller triangle over a year period pushing up to the top area of the triangle, and then the perfect signal on the breakout as well. And some of the negative things for India at the moment in terms of sorting out their economy, would be potential disputes with China. They've already had, I believe, a Cold War begin with China, but it obviously hasn't made any mainstream news. But there is a Cold War between India and China at the moment. And as you can see, Obama being invited to India for Republic Day, and Modi's closest now with America, tells you all you need to know about which side Modi is choosing. And then you've also got the problems up in Kashmir region, and then other states and countries alongside near Bangladesh and Assam state as well, that China have had an influence over. So in terms of negatives, also the very fact that a lot of these government institutions with these types of IPOs that will be coming out over the next few months are only looking to give 25% to public participants, doesn't really, when you look at it with a fine tooth comb, give much hope for these companies to be run in a professional manner. 75% of them will still be run by inefficient government bureaucrats, but it may well be enough to convince the greater public at large the bull market in India is on, and there could be a process now like Margaret Thatcher did in the early 80s in the UK, where she opened up industries that were nationalised to the stock market, and India may well go through a boom phase like that over the next 6 months. He wouldn't be able to do any more and hand these companies over to the public, to the stock market, simply because of the way India works. But even 25% will be viewed as a good start in terms of these companies in the future that are wholly owned by the government, that will be put on to the stock market, so the public can participate in that, and that should generate a boom like it did in the UK. But again, the reforms that are needed to really open up India probably won't come about as much as some people would like to see, and that's really where the substance of this move will probably break down. But you can see the Steel Authority of India hasn't had a tremendous move up at all since the Indian market's broken out, obviously with commodity prices getting hammered. It's held down this market, but you can see on the 5-year weekly a trend has been broken here with this spurt upwards. Another semi-gradual trend has been broken here, and you can see where I've drawn the sideways trend, and until it broke that I wouldn't consider buying into the market. But you can clearly see the upward trend here, and it looks like it might just break that and come back down again. But again, this is one stock that's undervalued compared to some of the other companies that are listed on the Nifty that are well overvalued. So if you were looking for an Indian exposure over the next couple of years, you should do quite well in the Steel Authority of India, but I don't think it's the right time to buy at the moment. And they should have a monopoly to print money, but of course these companies are very inefficiently run, and the stock picture doesn't look that fantastic. And you can see here from the monthly chart, the big trend line I've got here coming down, it still hasn't broken that, and you've had a limited area of congestion as well. But you can see how it's come down really before the gold and the silver boom ended, and the move has been quite harsh, and it's come down very solidly from where it was previously. And you can see back in 2001, 2002, this is the type of action we like to see, and then the big upward move in the stock culminating in a huge spike move, parabolic move, and crashing down in 2008. So this is one stock to look out for in the future, but again, I don't think it's ready yet. This is another company that I've bought into that I'm looking for a selling point now. I think this parabolic spike here signifies that the move is coming to an end at some point soon. I've drawn a trend line up here, and when it gets to around the 900 area and I see some fluctuations, I'll liquidate any holdings I have in this company. But you can see the tremendous breakout, the congestion area after the breakout, and the unexpected power of the move upwards. But if you look at that on a percentage scale, it's been a tremendous rise, and you can see it here on the weekly. Again, you draw the trend line, it breaks out, and this is the congestion area, what you saw on the monthly, and it looks far more contained here. It's a beautiful chart, and it breaks out upwards. That's a perfect sign to go long the stock when it starts congesting above a long-term previous range, and you can see the power of the upward move. And anyone that's long this stock, I'd be looking for a selling point very, very soon. It won't last forever. Another company under this brand, this is the Industries stock, and you can see here I've drawn a line here just to symbolize the step upwards. It doesn't have to be perfect, and you can ignore the spike ups. It's where the congestion takes place. So I would term this, where my mouse here, as the first step. This is the second step, that as the third step, and then breaking out into a triangle with most of the action above the previous congestion areas, which is a very positive signal. And it's come right up now, and I've sold most of my positions in this stock, and I'll look to get rid of the rest perhaps sometime next week. And you can see here back in 2001 it had a tremendous rise as well, and this just goes to show that these types of opportunities don't just exist on the American markets. Anywhere where there's liquid stocks, you can make money, from Japan to India to Holland to America. And you can see here this company's called Abbott India, another fantastic chart. You can see where I've drawn the trend line and the breakout. You've had a false buy signal. When you've got something like this and it breaks this trend here, it's better to sell out and take a small loss and look for another point to go back into the stock, and that would have come around this sideways area here as it's broken out into the step congestion. The first step where my mouse is, the second step, the third step, the fourth step, and then a tremendous rise upwards. So you can see a lot of these stocks in India have taken off massively, and no doubt that's why they're being promoted in all the different financial publications and looking to distribute some of their holdings. The professionals bought at these low levels where my mouse is. They'll be looking to distribute to ETFs, mutual funds, and the Indian public as well at much higher prices from where it is now. But there still could be some juice left in this market here. I've lightened down the load a little on this particular stock, but it hasn't broken any severe trends on the upside, so I'm still long, and I'll be looking for some volatility, and I'll be looking to sell out sometime within the next 6 months, and I could well sell out sometime next week depending on the various actions in the market. As I say, I don't like to be greedy when I'm holding on to a very nice profit. Sometimes it's better just to take it and move on and look for the next base area. Allied Digital Services here, this one looks pretty good. You've had a very steep downtrend broken, you've had a less steep downtrend broken, you've had this one, which I love being broken, is the gradual downtrend, and as it works its way out, you just need to give it a bit of time to see where it develops from here. But this looks to be an undervalued stock on the market, and during the last phases of any bull market, even though the Indian bull market, as I said, may have a couple of years to go, I mean, I would estimate, it's very hard to predict these things, but probably another year or so, there's still time for this stock to have a massive rise up during this phase of the bull market cycle. And you can see here it's poked its head out, and this could be some type of shakeout that comes from here, but I've bought lightly because it's broken the sideways trend, and I'll be buying on a much larger scale if it breaks the 40 point. And this is it on the monthly. You can clearly see massive downtrend line and broken here, and you can see how strong the market is. It's popped up above the previous congestion areas, and I'll be uploading part 2 over the ensuing weeks as well. And just be wary of any touting. Make sure that what you're buying into, if you're looking to buy into emerging markets or markets like India that have huge potential, that there is no panacea, and buying into ETFs and mutual funds on a whole in a basket is a good thing to do when a market is very low in terms of the index, but it's a bad thing to do when the index is extremely high. And as I showed you at the beginning of the broadcast, if we scroll back up, this is where the Nifty is now in comparison to, say, let's just take it back to 2003. It's over 700% off its low of 2003, so you can see it's had a tremendous run upwards, and there's probably some more to go because of this nice shakeout and consolidation and accumulation area here. But again, you know, it's something you should put on your radar to watch out for. You know, in the next 6 months to a year and a half, the Indian market should be coming off the boil, and any stocks that you have, don't hold on to them. If they break long-term uptrends and they look to have a lot of volatility, then the best thing for you to do would be to sell out and look for stocks that are undervalued and looking to take off. A market like this, you can end up buying at extremely high levels and be holding on to losses for 4 or 5 years, just like here, for example. People buying into the market back in 2008 suffered tremendously and didn't see any real returns for 5 to 6 odd years. So this is very important in terms of timing sometimes, where to buy in if you're buying a basket of stocks overall. If you're individually selecting stocks, which I highly recommend, then that's the best way to go, because then you can look at each individual stock picture on its own and you can make a judgment call off that particular information. Okay, that's it for now. Over and out, and I'll speak to you soon. Bye bye.